Welcome back, everyone. Oh man, I hope you've got 99 health because we are back to another little bit of red in the marketplace. And what's really weird, it's just so weird. Yesterday, we made it's honestly scary at this point, okay? Yesterday, there was a video I posted on the channel called "When Will the Market Crash Again?" And in the video, I warned about how even though we're having this rotation back because now tech seems cheap, be careful. These institutional investors are big weenie babies and they get spooked very easily. And it wouldn't be shocking for us. And I honestly, I didn't think it'd be this fast. But I thought over the next few months, as we start getting inflation data again, and the inflation data comes in high, because we know it's going to come in high. We know the inflation data is going to come in high. It's not a secret. The inflation data is going to be the worst inflation data we have ever seen, the likes of which you've never seen before for March, April, and May, which we get in April, May, and June. That will happen. The problem is the market is now responding even faster to that. And I'm going to pull it up here, but there's a nice little Bloomberg article that popped up. They're like, oh, now investors are all of a sudden worried about inflation again. It's like it's ridiculous. Like yesterday, they run the Bloomberg article going, oh, they're not worried about inflation anymore. And then today, they're worried about inflation again. It's nuts. It's absolutely crazy. So let's see what's going on in the market here. ChargePoint Holdings, which, look, we looked at these earnings yesterday, and they were a little odd. I never dove into them deeper, but I have to say, the lack of growth that we were seeing in charger deployments, subscriptions were up a little bit, but revenue from charger deployments was very disappointing. Workhorse down 8%. Look at this. Cannabis down 7%. EXPI giving up almost probably giving up about its entire gain yesterday. About that 10% gain yesterday. The gain numbers are going to be bigger than the loss numbers though, because if you gain 10% at 90, you gain 9 points. But if you lose 10% at 100, you lose 10 points, right? So the gain numbers are going to be a little. You don't have to lose as much to give up your gain from yesterday, but I'm not going to do all that math. So anyway, Nano Dimension, okay, still up 18% from yesterday, but down about 6% now. Looks like cannabis. Look at cannabis really selling off again here. So Tilray, cannabis, or Sundial over here. A lot of excitement yesterday with that talk about the lower house in Mexico potentially passing this. A Matterport almost under 16. Under 16, I like picking this one up. Look at this, NEO right back under 45. Now we're definitely holding that higher numbers, even though we're down in the pre-market here at 25.50 at CCIV. Better than what we've seen in the past. Tesla right back to 670. 670, it seems to be a funny number that it always seems to rubber band back to. We got 30 seconds until market open. We got Etsy down. What else is, everything else is down like 2-3%. What's green today? So green today, oh, of course, GameStop and costs. and those are really your leaders, Microvision. And then we got a couple things here up about 0.5%. Recovery stocks, airlines, Nordstrom's, these guys up about 0.5%. So another interesting kind of rotation day where tech sells off 3 to 5%, but recovery is up, 0.5%. Let's listen to the opening bell.
In terms of the next magic market they're opening, you also heard people saying it's going to buy Bitcoin for Apple Pay. You see a lot of speculative stuff on this call.
Yes,
music.
That's the period we're in. There's the opening bell, guys. A look at the NYSE and the Nasdaq on this final trading day of the week. As we said,
doesn't look as bad when we look at this chart.
At least four: the Dow, S&P, Russell, and transports, and we are on pace for our best week in about a month for the major indices. Guys, we generally pay close attention to trends in aviation just because of the large reopening.
See, they don't do the music in the opening. They only do it in the after or the close, which is disappointing. Let's listen to them for a moment.
I noticed TSA just put out some passenger traffic, 1.28 million yesterday through TSA, and that is going to be just short of the record post-COVID.
1.2 mil on a Thursday. That's actually really good. That's exciting. Trying to open up again, get back to normal, please. Let's get back to normal. Nice. All right. I got the Bloomberg terminal pulling up. I want to pull up top news stories, and I want to see if I can find what I read like 30 minutes ago. Maybe I have the title here because I want to show you what the suits are reading. Because when the suits are reading these things, it's good for us to know them as well. And we'll pull up the 10-year as well. So I'm going to pull that up. Give me one moment.
Value, debt plus equity of United Airlines, it's back to the pre-COVID peak. Some of them are even higher than that. A basket of travel and leisure-related stocks is higher. Now, the economy is bigger this quarter, next quarter. And in theory, the floor for the entire market.
All right, here we go. So this is what the suits are reading today. A fresh bout of bond volatility hit markets Friday. Here we go again. Like the relationship was chilling out a little bit. The last 3 days, nobody really cared. The bonds were like chill. They were over 1.5, but they were chill. They're like 1.52, 53, 1.54, 1.49. Chill, totally chill. Nobody cared. The fluctuations didn't matter. Tech was doing great the last 3 days. And then here we go. Futures on the NASDAQ 100 slumped after accelerating vaccinations in the U.S. and the passage of the $1.9 trillion relief bill sent Treasury yields surging. The tech-heavy index, that's the NASDAQ 100, dropped as much as 2% as Treasury 10-year yields hit 1.61%. A Bloomberg report that Beijing is expanding a crackdown on 10-cent holdings also weighed on the tech sector. Euro shares dropped, and so on. All right, here we go. We think 10-year yields the 10-year yield has further room to go and could reach 1.8. Remember, I think this is going back to 2%. But I don't believe, I don't think just because we're at like 1.6 now, we're having all this volatility, that when we go to 2.0, that the market's just going to always be in the doldrum between then and that, or between now and then. We'll see, though. I mean, obviously, right now, the market's deciding to do. We went back to tech too fast. It's the suits are like the most emotional disasters of people. But remember, we're not moving this market. It's not the retail investors that are moving this market, in my opinion. I think it's the suits trying to take advantage of these swings, and they're looking for a catalyst. And I almost wonder how much of this is just algorithmically programmed to start trading when we see these minor fluctuations, and that's almost what's exacerbating this, because some of this is silly. So okay, now we've got the opens here. Let's go ahead and look at the open volume on cost, for example. What do we got here? So cost 647. Let's see what's going on here. Let's see if we can compare this to yesterday. Okay, so yesterday's open on cost. That's about the same. This is almost the same kind of momentum that we've had in the last few days on cost. With the exception of this day, that was 3.7 million here 2 days ago. Oh my gosh, yeah. But there was also a day cost was up like 100%. Briefly, I think it ended like 60% up. I don't remember which day that was. But anyway, all right, look at this. GameStop coming back. 1.1 million in volume here on the opening minute. 355, 264, 171. So a little bit of a declining volume here, but still nice and green here on these three classic momentum plays. Coupang is up another 5% after its IPO yesterday. Look at this. Nordstrom, really, look at this. The recovery's really gaining here. You've even got American Airlines really pushing here. These guys are the ones that are pushing right now. And this goes back to like last April. We talked about having like a seesaw. I called it the seesaw portfolio, where it's kind of like you got tech and you got recovery, and they just like seesaw. And it was literally like, I feel like April, May, June of last year, it was literally like, oh, tech's down, recovery's up. Oh, recovery's down, tech's up. Just the classic bob back and forth. Nothing has changed. The only thing that's happening is, as this bobbing is happening, the market's kind of like lifting that seesaw up, or barbell, some people call it. I think might be a better analogy. But anyway, really interesting. EBIX is trading with the recoveries. We got, what do we got here? AT&T almost at 30 again, but we know it can't be over 30 because well, it's AT&T. Dave & Buster's, Gap, Norwegian, Marcus, Johnson. These all great recovery plays here. Walmart, barely up. Okay, so what's losing? So ChargePoint, still up, still down 12% here on the open. Painful open for ChargePoint. Nano Dimension selling off 7%, and they just had earnings as well. Look at this Blink going straight into the gutter here, down 7%, along with, I don't know if it's getting pulled down with ChargePoint or if the Chargers are one of the first ones to really bite the bullets. That could be as well. The valuations on the Chargers are still a little difficult for people to figure out. Yeah, I did see this. There was a Hindenburg report. When I woke up, I saw this. I'll pull it up. Look at this. Lordstown Motor down 17% here, thanks to this another one of these Hindenburg research reports. So Hindenburg is a short seller that basically bags on any company they like to short sell. Let's take a quick peek at what they say. Actually, you know what? Give me a second. I'll pull this up a little bit differently. It'll be easier for us. Quick additional notes though here. Pinterest right back under 70. Palantir down a little bit. Also, what's Palantir down to? 25, 27. Redfin, Neo, Tesla, all the usuals down about, I'd say 3, 4, and 5% here. Square, Airbnb, Shift, Virgin Galactic, Salesforce, Rocket. Oh, Rocket not so bad. FRX only down 0.5%. Yeah, interesting. So yeah, wow. We are back to the bonds mattering again. They didn't really matter the last 3 days, but all of a sudden they're all spooked again. It's so weird. We literally talked about this potential yesterday, but I didn't think it would come this fast. Maybe I screwed it up. Maybe it's my fault. All right, take a look at this. Short seller. Hindenburg Research releases hit piece. That's what this should say. Hindenburg releases another hit piece, but this time on Lordstown Motors. And their title is Lordstown Motors, Mirage, Fake Orders, Undisclosed Production Hurdles, and a Prototype Inferno. Lordstown Motors is an electric vehicle spec with no revenue and no sellable product. Yeah, I mean, that's like a lot of other companies. The company has consistently pointed to its book of 100,000 pre-orders as proof of its demand for its EV truck. Our conversations with former employees, business partners, and extensive document review show the company's orders are largely fictitious and used as a prop to raise capital and confer legitimacy. Oh my God. Lordstown recently announced 14,000 truck deal from E Squared Energy, supposedly representing almost $1 billion in sale. E Squared is based out of a small residential apartment in Texas that doesn't operate a fleet vehicle. These, I'm not going to read this whole thing, but these short seller reports, it's 37 pages of this. These short seller reports, like, they're so powerful because they stitch all this information together. And these people, they just short the company. This must be that apartment building. They short the company. Then they release a hit piece. The stock goes down 17% at open. They cover their short, and they walk away with a ton of profit, especially if they do it with options. I mean, they could just be up 50% anytime they do this kind of stuff. This is crazy. I'm not going to read the whole thing here on the live stream, but it's kind of funny how these short sellers, how powerful they are. And it explains kind of why I feel like Elon Musk, for example, hates them. So, okay, let's listen to CNBC just for a moment here. We'll go back to the sticks in just a sec.
European financials, for example, really did have a huge comeback. We'll see if that can last, Carl.
Yeah. Meantime, that 10-year keeping still above 161. Let's get to Bob Pisani. Hey, Bob.
Happy Friday, everybody. And you're right, Carl. Yields are smacking around the stock market again. So what we're seeing is the stimulus is pumping the global economy. and it's moving bond yields, and that's affecting the markets. Let's take a look at the sectors. Banks, of course, a big winner. They've been a big winner this week. Bank up about 6% as a group here. Energy is holding up in industrials. There's your reflation trade, which continues to be strong. What's lagging? The two sectors most sensitive to moving yields, which would be tech stocks as well as China. China's been lagging all week along with technology.
Yeah, what if it was CNBC or like the news outlets that were the suits that are like, oh, Treasury's going back up. We wonder if tech's going to sell, and then tech sells off, right?
Higher yields is really, really powerful. You just feel the market. The yields want to move up at this point. Stimulus is the big mover for global growth. What did we had? $6 trillion in stimulus in the last year. That's 30%, 25% of GDP of the United States. Those enormous numbers, bigger than we've ever seen here. And then we have the inflation story, transportation bottlenecks adding to price increases. Hope people think that'll go away eventually. But you get the idea. This is very powerful, this narrative for a higher move up in yields.
It's very
because
stupid.
of that, you get that growth value yo-yo, I call it. And value is winning, at least this week. There you see the bank stocks. Great week for bank stocks. They're up about 6% as a group, as I mentioned. There's the big money center banks. The regional banks also having a good week. The reopening play, retail, for example. These retailers have gone bonkers this week. They're all up double digits here. Well, there's the growth stocks I'm showing you here. So you see Tesla, PayPal, NVIDIA, Microsoft, all to the downside. They tend to move to the downside on what we've seen. But I mentioned earlier, retail stocks have been doing great. Macy's was at a new high. They're flat to slightly up today. So that's a good sign overall, that reopening trade that we're seeing. If you're confused about all this, growth versus value, what do I do? Banks, do what Jack Bogle did. Own the indexes. The S&P 500 was a new high yesterday. And why would you worry? Why would you want to worry about growth versus value? Let the nerds worry about it and own the broader indexes. I'm acting like Jack Bogle, but I am a Jack Bogle disciple, of course. Finally, just to make a quick note about active versus passive management, we have some of the best hedge fund people in the world on, people who are legendary and do outperform the market. But it's important to remind everyone, most people don't. Most active managers are terrible long-term. S&P Global every year does a study of active managers against their benchmarks. The year-end study came out yesterday for December 31st, the whole year. And once again, numbers are bad. I'm looking here at growth funds here, big active growth funds. I
feel like no matter which direction they go, it's these kind of reports that just accelerate what the market is doing in either direction. Like yesterday, they're like, oh, yeah, biggest tech rally. Tech's back. We're hitting record highs. This is so great. Everything's awesome. Investors aren't. We literally put this article up yesterday. What it was, something effective like Wall Street rethinks impact of Treasury as tech goes back up. And it's like, okay, like we knew that rotation was going to happen. I mean, that can always rotate back again. And then today, and inflation concerns, the relationship is really strong. I mean, we just printed 30% of all the money in the market. Oh my gosh, these people.
The loftiest level since the end of 2018, let's call it a little bit more than 2 years. But that's not the only issue to pay attention to. Last night when Verizon priced their jumbo deal, hedging, selling pushed up some of those yields, not only domestically, but everybody's in the same boat. Everybody's central banks looking at each other going, whose rates can we control best? And it popped up a bit. And at the end of March, not only in terms of the fiscal year for Japan, but also what's half year, but also what's going on with regard to the end of March changes and some of those margin requirements for govy securities that was changed during the COVID crisis. Now, many of these primary dealers are not only dumping their treasuries, but when you add in everything I just described, you're definitely seeing pressure. Look at a 2-day of 10s. We could see that 161 plus is kind of the high yield. And if you open it up to 1 week, last Friday, we had a 162 intraday high yield. Remember, the high close is 159 for 10s. 232 for 30s. You really want to watch these levels on a Friday. Remember, it isn't necessarily how high yields are going to go. You shouldn't be picking tops. These are still very aggressive markets with momentum. What we really want to watch is how small the pullbacks are. Because if the pullbacks remain as small as they are, there's more upside in yield, more downside in price. Oh, by the way, and if you bought any of the auctions, you're underwater there with settlement on Monday. There's more selling pressure. Open the chart up to the end of December 2019, and you can see we're at 13-month high yields on 10s, 14.
All right. So basically, talking about yields going up, and whoever bought, it's funny. He's slamming all the people who bought at the bond auctions over the last couple of days. Basically saying, oh well, if you bought these bonds over the last couple of days, now you're upside down. Great, thanks. Great recommendation. Just stop buying bonds so the yields go even higher. It is the suits doing this. I think you're all right. Here's another one. Treasuries tumbled, which means their prices tumbled, and inflation expectations lurched to a fresh 7-year high as traders took another tilt at pushing the 10-year yields beyond the closely watched 1.6 level. What is this? What is it with these writers? Literally last week, they were saying 1.5 was the level that mattered. That 1.5, that's it. We go over 1.5, that's it. Market crashes. And we saw that. And now they raise the bar to 1.6, and now the level's 1.6. Can we have some freaking consistency here? Oh, closely watched 1.6. Never heard of that before in my life. 1.5 I've heard of before. Oh my gosh. Yields on the US benchmark rose as much as 8 basis points. Okay. Blah, blah, blah. Okay. All right, failure to break the 1.6 invalidates the bearish trend. It's literally the same thing they talked about last week about the 1.5. Unbelievable. All right, let's go. Let's see what's going on. Let's see the damage. Okay, so ChargePoint actually recovering here. ChargePoint was down 12 to 13%, recovering a little bit. Which, remember, I don't really have a good transition here, so I just got to mention it. In 3 days, that amazing coupon code down below does expire. HODL 38% off for the superior courses on building your wealth, real estate, property management, sales, stocks, and psychology of money, you name it. They're down there. All right, let's go back to this. So, and the stocks one, all of them include the private live streams, which we'll be doing in about 2 hours. Every day the market's open. So ChargePoint is recovering here. So we were down about 12 to 13%. Market's now recovering on ChargePoint. The market is not recovering on cannabis, at least not on Tilray or Blank. OGI, no recovery here. Workhorse, not really doing much here. DocuSign heading nicely down to a potential 200 level. That's where I want to be able to add to DocuSign again. What do we got here? Zillow, down 6%. Fuel Cell, 5.77. A Silver Spike, BNGO. EXPI. I made the video yesterday talking about how we could see this potential crash again, thinking that we'll see it over the next few months. It came today. This is to me a sign that it's not going to be a matter of this happening over the next few months. This is just going to keep happening week after week after week. I think we're going to see these really big greens, and then we're going to see reds, and then we're going to see greens, and we're going to see reds. And it's going to be more extreme than usual. We see like, oh, cool, like that one stock is up 10% today. Everything else is like 1 to 2% back and forth, right? Maybe 2% back and forth. Like that's the typical that we see. Like, oh, wow, look at that stock. They lost 20% today. Everything else 1 to 2%. We could be going into this bizarre 3-month period where we have to stomach this volatility much, much more aggressively because we get these, yay, we're up 10%. Oh, we're down 7%. Yay, we're up 7. Oh, we're down 10. Wouldn't shock me, especially with how emotional the market seems to be. I mean, the bond auction was fine, totally fine. Yet here you go. All it takes is a couple suits on TV talking about, well, we did just pump 30% of our GDP into the market. All right. Hyliion at 13. EXPI down about 4.3 again. Redfin 4. This snaps our 3-day recovery here. Enphase 4%. What else here? Bumble's down 4%. And they had a couple good days here. A couple really good days as they reported. NIO down a bit. Tesla down a bit. They had a tiny little fire at one of their facilities in Fremont yesterday. I think that honestly is getting a little bit more news attention than it probably deserves. It looked like a pretty small dinky fire in one little building, but it'll make the news. All right, what else? DoorDash, Unity, Social Cap, all these guys down about 2% here. Facebook 2%. Palantir not down as much as it was earlier. Back over 26 here, trying to recover. Looks like the market's really trying to almost fight back here against this this opening sell-off. Churchill, Tattooed, Beyond Meat, Twitter, BlackBerry, NASDAQ. Yeah, these guys. Okay, here's our 2 to 1% range. And then what are our gainers today? Yeah, look, I mean, it's kind of interesting. Canoe, here we go. Right back over 15. It also weird. I mean, at 12, 13, and 14, I'm like, this thing's going back over 15. But what's weird is that it's green on a day like today. When like the Neo, the Xpeng, the Tesla, all these things are down. Yeah. No one is selling Tesla because of Little Fire. It's because Citadel is selling Tesla to cover GameStop. Maybe. The short interest is down to like 20% on GameStop. Like that short interest is about to get eradicated. And then there's gonna be nothing left. It's interesting. Yeah. Yep. Yes. Sorry, one second. Okay. All right. What do we got here? Costs. Running again. Nice little takeoff it had here about 10 minutes ago. Express running again. Spirit. Nordstrom. I don't get this. How is Canoe up 7% now? I think it's great. I like the company. I support the company. I put a pre-order in for one of their $30,000 cars. I don't know, a few months ago. This is a company I really want to pay attention to, but I'm shocked it went over 15 so darn quickly. But what's more shocking to me is that it's playing with the recoveries right now. American Air, Cheesecake, Spirit, AT&T, Macy's. It doesn't get more recovery than this. And look, Shift is playing with these guys as well. It's like they all want to play ball together here today, and they're doing it. Wow. A Canoe now up 7% and trending up even more. Yeah, 879,000. It's got some decent volume. I wonder how this compares. But yesterday was a green day too. Doesn't matter. All right, let's see. OGI selling. Okay, what do we got under recently viewed? Anything else over here? We have Funko up 10% again. Wow. GameStop up. It's a Tesla option. So yeah, SOS down 4.4, Riot down 4, Voyager down 4, Roblox. I feel like this is its first red day since going public. Yeah, yesterday it was pretty sure it was up yesterday. And then of course we had IPO day when it was up. Okay, let's listen to this guy's outlook conversation.
Things like that for the pools. How much of it is, though, about newly constructed pools as opposed to the install base, the existing
pools?
Customers?
Yeah, we do build the equipment necessary or needed to make.
Oh, I thought he was going to talk about economic outlook. He's talking about the outlook for pools. Millennials are showing increased interest in outdoor spaces. I like outdoor spaces, but I ain't paying for a pool. That's a lot of money. People spend like hundreds of thousands of dollars on pools. Maybe not hundreds of thousands of dollars, but I mean, like, I don't think you're getting a good looking pool for under 100K. I mean, maybe like 50 plus, but still, oh my gosh. If I put that money in Tesla stock, you know how much money I could lose quickly? Like, I don't know, man. Pool or Tesla stock. What's Varney talking about?
Carjacking. Susan, take me through it, please.
Well, he credits his Tesla Model 3.
They're talking about carjackings. I don't understand Fox Biz. And this is like a daily problem I have. I don't get it. Talk about the market. All right. I'm going to pull up Bloomberg TV. Bloomberg TV. All right. We can watch this. Oh my gosh. It does look interesting, though. Jeez, man. All right. So, all right. Bloomberg TV is almost up. And then we're going to look at the sticks here. Jeez. I mean, this should be on the regular Fox show. It is interesting. Okay, everything's on commercial right now. Fine then. All right. Where are we? Let's look at the 10-year too. It's propaganda. I'd rather swim. Kevin would rather swim in Tesla stocks. All right, let's pull up the 10-year. Okay, 10-year. Okay, 10-year. Okay, let's see. Line chart. 10-year. No, yesterday we looked at the short percentage for SOS and it was like 20%. Maybe we'll look at it again later. All right, so what happened here? I like Unity at these cheap levels. Yeah, no, Unity's nice. I haven't looked into them, and I got to stop buying companies that I just buy without doing my analysis on. I only do that a little bit, but it motivates me to do my analysis. Anyway, this was yesterday. Yesterday was nice. Yesterday was like, meh, yep, nope, basic. I don't know what happened today, but it looks like what is this? 1 a.m. Eastern time? I don't know the significance of 1 a.m., but apparently there's some significance here for bonds. And I don't know much about bonds. But yeah, there you go. Right up to 1.61. I think that we've just got algorithmic trading that just moves this stuff. That's like, oh, bond goes up, trade out of tech and go into recovery. And then vice versa. Oh, wow. Look at the volatility of Lordstown here. Lordstown down 18%. A 37-page short seller hit piece. It kind of reminds me of what they did to Nikola. They were right about Nikola, which was kind of, that gives you a lot of street cred. Charge point down 8% still. Yeah. Okay, so nothing's really changed here. Let's go back to the news. Let's see what the top news here is. All right. Let's see what the suits are reading. Okay. Binance probed. Oh, Binance. This is a crypto exchange. Kind of like the crypto broker. Crypto broker BlockFi. Go to metkevin.com/BF and get up to $250 for free and get paid interest on your cash deposits and your crypto deposits. metkevin.com/M1. I needed the soundboard back. We haven't used the soundboard in a while. We should really have this music when I do the pitch. It's kind of like, oh, well, wait, the music's not on. Hold on. If you want to get 2 free stocks, go to metkevin.com/Weeble. Deposit $100 and you'll get 2 free stocks eventually. Okay. All right. So what is this about Binance? The largest cryptocurrency exchange is being investigated by the Commodity Future Trading Commission over concerns that it allows Americans to place wagers that violated U.S. rules. Seeking to determine whether Binance, which isn't registered with the agency, permitted U.S. residents to buy and sell derivatives, that would be options, that the regulator polices, said people. Okay. Oh, interesting. Okay. Wow. We will have to keep an eye on that for the crypto space. U.S. crackdown. I wonder how the cryptos are performing right now on this potential here. Let's see here. Let's pull up our favorite, Robinhood. That's almost like now just to bother people. Okay, so Bitcoin at 56.1, down about $2,000. Doge at 55, and the Ether, and that's not the Ether, but Ethereum is at 1752, down from its high of about 1870, almost 1871, a little bit ago. All right, so sell everything Friday. Oh yeah, gotta love me a sell everything Friday. COVID has made Americans richer than before. Okay. Biden sees normalcy by summer. Covered Biden's speech yesterday. I like the idea of anybody being able to get a vaccine if they want it by, May 1. Should be sooner. Okay, what is this? Michigan prelim. March consumer sentiment at 83 versus an estimate of 78. That's really good. That's a good alert. Consumer sentiment way higher than expected. We'll actually get to see more of that full story here in a moment. All right, let's listen to Varnes for a sec.
To your money, a nice gain for the Dow. It has reached 32,600, but a sharp fall for the Nasdaq. Not as bad as it was, but that's down 150 points, 1.1%. Big tech, that's the problem for the Nasdaq. All of them on the downside in pretty significant terms. I see there that Facebook is.
Yeah, this is going to be over the news in just a moment. So the Michigan sentiment really coming in way above expectations here. And this is on consumer sentiment. That's good. Let's see if this is it.
Move the market.
Good
Susan, the number?
Yep, higher than
Man, we're fast.
83.0. That's higher than economists forecast. We're looking for 78.5. So it looks like consumers are feeling a lot more confidence. And how much more confident will they feel when they get those $1,400 checks as part of this $1.9 trillion stimulus plan? You know, Stu,
At least $1,400 more confident.
important to the U.S. economy, representing around 3/4 that powers growth in GDP.
Yeah. And those checks could be arriving this weekend or certainly early next week.
Oh my gosh, what happened at Enterra? The thing just doubled. Look at this. It's suspended right now. But Enterra just doubled. This is ticker symbol ENTX. Got a big fat double over here. Goes from what is this? 559 to 935. It says it's up 131. So probably because we rose in the pre-market too. So let's see what's NT and then X. Okay, I can remember that. Let's figure this out. It's probably another one of those FDA approvals. Man, those things go flying after some sort of FDA news, but they can come crashing hard too. So what's happening here? Trading paused. Osteoporosis drug results. Okay. I wonder what the drug results were. Positive results from trial. Osteoporosis. Now, what is that? That's like the weakening of your bones when people have that, like, where they kind of crouch over time. So I'll pull this up on. I've got Seeking Alpha on the iPad. I mean, look, I'm all for these things solving people's ailments. Enterra rise as much as 77% in the pre-market, extending the 153% surge they saw on Thursday. Oh my gosh, this is now like turning into a triple here. Jeez. Let's look at that for a moment. So let's go to the 1 hour on Ent. Oh my gosh, this thing went from $1.22 to where it just hit $10 for a moment. Trading's resumed. It's just under $10 here at the moment. Whoa. These bio stocks. The problem is, like, how do you get in before the skyrockets, right? And you just have to have so much money spread around all these bio stocks, and a lot of them just failure to launch. All right, let's go back here.
In me, at least, inspire positive confidence going forward, as they say. How about you?
Yes, you know, our friend Laura Ingraham noted it sounded like a funeral. It sounded like a funeral speech. And this is, I saw this across.
Oh, Laura Ingraham slamming Biden.
All kinds of different people, different politics, different.
That's redundant, isn't it?
Surprised and a little taken aback at this tone and at the message, which you covered very well in your monologue. Look, this is an opportunity, and what the government should always want to do is have legitimacy, is be able to set a table where
term trends. Anytime, there's two ways.
We did see the article on Lordstown.
It's a better entry point, certainly, if you're thinking about long term in areas like biotechnology and sustainability, the investment in tech infrastructure, cybersecurity, all of these things that you all talk about all the time, which are very real in terms of the needs of the economy in this new world in which we live.
Let's listen to this guy.
March, and of course, we know what happened last March.
Half, according to the experts.
All right, well, for more on President Biden's Build Back Better, we welcome Tiffany Wilding, PIMCO Chief U.S.
Oh, this could be interesting. They're going to talk about infrastructure. Let's listen to this.
Just base case here. What is your economic GDP forecast with the stimulus and inflation? Yeah, so we think that this, close to $1.9 trillion in stimulus, much of which is expected to hit the economy this year, could boost growth, to over 7%, and that would be the fastest pace of growth that we've seen in, the last 40 years. So ultimately, that's a good thing, and as a result of that, we think that kind of the output gap or the capacity within the economy that could close by year end. But still, I think it's important to keep in mind on the inflationary side, that inflation, we still have a pretty large output gap. It won't close until year end, and I think most importantly, there have been structural changes in labor markets, kind of over that 40-year time frame, that I think will, dampen the extent to which you do get prolonged or inflationary pressures as a result of this. So we're looking at this,
the House of Pain.
Maybe some temporary price level adjustment, but ultimately, we do expect inflation over the long term to remain relatively anchored around the Fed's 2% target.
Well, that's what the Fed says, Tiffany, and their big argument is that it's not the output gap in terms of GDP. It's slack in the labor market that's going to keep things really slow and inflation compressed. How soon do you think we get back to A, the level of employment we had a year ago, and B, back to increasing employment?
Yeah, so I think that is the key here. And even with our pretty dramatic growth forecast this year, we don't see jobs that were lost during this pandemic being fully recuperated until the middle of 2023. And I think that there's, some question because, we should have had the pandemic not happened. We should have actually been at a higher level of jobs. So, if you think about what the trend level of jobs would have been outside this pandemic, it could even take longer to get to that level. So we would absolutely agree that, it's still going to take some time for the Fed to achieve this more inclusive maximum employment mandate that it says. Yeah, Tiffany, it feels like a big part of that, though, is what happens when people get this stimulus money and then how do they spend it will really depend on the job market as well. So this is the data that had come out earlier from the Fed yesterday that just showed that U.S. household net worth really soared in the closing months of 2020, hitting a fresh record. A lot of that, though, is going to be between appreciation from housing as well as the equity market. But that's a lot of cash sitting. Is it looked at as deferred income or is it looked at as savings?
Yeah, I mean, so we think a lot of the excess savings that are currently sitting on household balance sheets in aggregate, it's actually sitting on the balance sheets of the people with the most wealth and the highest income. And those people are the least likely to spend it on consumption. So there's been a lot.
I ain't spending it, that's for sure.
Pent up excess savings. I think some of that could get spent, but the majority of that probably won't get spent, at least not right away. We think that the bigger probability here is that actually gets distributed into financial markets as well as residential real estate investment. And so you could see some frothiness there as a result of this. But overall, we don't think that it's going to be a big contributor, at least to an inflationary impulse for consumer prices, or contribute further to the growth impulse.
Someone once said making predictions is hard, especially about the future.
I have to say, I'll make my prediction. I still think and I said this probably almost for a year now. I think we're going into that frugal decade where the people who are investing in stocks and real estate realize that this is how you make money in America, is with stocks and real estate over time. Obviously the last few weeks have been a little volatile, but over time, that's how you make money, stocks and real estate. Everybody else gets screwed. Businesses, stocks, and real estate make money. And if you don't have any of those, you get screwed in this country. And really, I mean, people's wealth might be up, but I think she's right. I don't know that people are going to just go out there and spend it all. I mean, don't get me wrong. I want to travel too, but I'll probably get bored of that really fast. And be right back to just stocks and real estate, I don't know. It's my take. I think this next decade is really going to teach people like, no. Save as much money as possible, throw it into investments, which is great. I think it's phenomenal.
As bad as we had feared. So we think services spending can accelerate, starting in the second quarter. And that rebound can be pretty dramatic because it's off a low base. But I think, when you ask, when will the services industry completely get back to normal? I think that will
take some time. There will be some permanent changes to behaviors as a result of this crisis. But we do think as the economy reopens, it's starting to reopen now. You've seen some states lift restrictions. You will start to see mobility start to increase, and we think things will accelerate over the summer.
Tiffany, last question here. Wraps into higher yields. And we have seen a rotation in the equity market on the back of that. And I wonder when you think the higher yields winds up affecting cross-asset, has more of a damaging effect on the market psychology, because we know the Fed's is going to be looking at that no matter what.
Yeah, I mean, I think that is a really, really key question here. So we think about financial conditions more broadly than just the bond markets. Of course, Jay Powell also talked about this. On our financial conditions index, despite the fact that rates have increased, our broader financial conditions still look pretty accommodative to us. So, I think it's completely appropriate that as we kind of move through this year,
she's good. She's got good opinions.
Tapering of bond purchases, which we think could happen by the end of this year, early next. I think it's completely appropriate for the markets to tighten financial conditions a little bit, just because the economy doesn't need the financial conditions to be as accommodative as it was, because things are getting better. So I would actually look at some tightening of financial conditions, that to be a good thing because it reflects improvements in the economy. I think what we don't want to see is markets really overshooting here. In the bond market, you have a much higher sell-off, which does start to affect equity prices. Because that larger tightening of financial conditions, we don't want that to to stop the economy from improving.
Great way to set up the show. Thank you so much, Tiffany Wilding of PIM.
I mean, look, I don't have to agree with everything she said, but that was not bad. It was not bad. Okay, let's see here. Oh, look what we got now. I got another one up here. Does it work?
I'll be back.
There we go. Okay, it does work. Okay, let's go see how the sticks are behaving here. Let's see what's going on. But I really have to say I like the Jim Cramer one. Jim Cramer soundboard is pretty funny. You could just Google it, and we get it. So we could do something like, "And let's get ready to look at the sticks." It's bad. Okay. So where were we? So ChargePoint has now accelerated losses here. Where, let's see, what do we got going on here? Let's go to the minutes again here. Minutes. All right. Get a South Park one. Oh my God. All right. So ChargePoint down 9.6%. Workhorse down 6%. DocuSign, Tilray. Yeah, I got some blood over here. Peloton. Peloton briefly dropped under 100. We were looking at that when it did. For me, Peloton's got to be a little less than probably 80-ish. And then I'd probably throw a chunk into Peloton again. Fisker, Nano Dimension. These guys really selling down here. Cannabis selling down again. I think Fisker's peak media is over. So this is a tough one. It's tough. We had a nice run the early part of this week, but it did start U-turning again, along with here now the broader market. Plug Power, Pinterest, Tesla. Tesla actually up within the day here. Look at this. We got, oh my gosh. Look at where we dipped. 666. Like, you can't make this stuff up. I honestly, I think people are just sitting there like, set buy order for 666. That's crazy. Crazy. Costs up a whole chunk. Let's look at what Antera's doing, because Antera was the one that was killing it. Okay, not as high. Not as high as it was. Kind of selling off a little bit there. Oh, look at Ebix. Let's go. So Ebix was supposed to be like a 1 or 2 day trade. And because a short seller totally bagged on this company, we're like, oh yeah, let's buy this. I still hold it. And I'm still like, let's go 35. Although I have to say 32 looks pretty juicy right now. My swing trade spreadsheet, I need to pump that up. I think on the swing trades, I think on that chart, we're up like 17K. I got because we've got the chart in the stocks course. That's where I put all the spreadsheets and my research spreadsheets or whatever. I put them all in there. But yeah, EBIX positive. It's kind of weird on a day like today that it is, but I'll take it. So it looks like Intera trying to run a little bit again here. Yeah, trying to push up again here. GameStop, I mean, it's just incredible. It just is continuing to trend up. It continues to be the most bizarre market hedge ever. Tech sells off, going to GameStop. DocuSign down 6%, kind of leading potentially losses. Yeah, let's see here. What's leading loss? No, ChargePoint's leading losses. Then we got National Beverage Corporation down 6.66%. Workhorse Docu down. Blink, Silver Spike, BNGO, these guys down. Redfin, Fisker, what else here? Let's scroll down to the bottom here. Cost Express, these guys doing well. Microvision, what happened here? Weren't we down? Yeah, look at that. We were down on Micro, and we just popped. Wow, Micro coming in clutch. Like, don't keep me down. AT&T's over 30. Oh, that's not a good sign. Let's see here. Ford, Airbnb. All right, so these guys are all good. Recovery here. Bitcoin down to 56.4. That's actually a little bit higher than where we were just a little bit ago. So I think we went down to 56, almost even here. Yeah, we went even lower. This morning, it looks like we went down to 55. We're really just recovering since then. Okay, then everything else losing money again over here. These aren't like major discount prices at the moment, with the exception of, I feel like Tesla, NIO, they've got some inexpensive prices, but we're also pretty dang heavy on the EV. Although I think EV, I mean, it's the revolution of this decade, and it's just getting started. So where's Enphase? Enphase 161, not as low as some of the opportunities we had for it, but still pretty low. All right, let's see what's going on over here. Let's see what drama we're talking about at the moment. Let's see. Oh, TV commercial, of course. Okay, well, in that case, let's go to Bloomberg TV. Economic impact of the stimulus package. That sounds interesting.
And our franchisee, who deals with maybe 300 technicians who twirl the wrenches in garages, said the same thing. He didn't think they were going to be rushing to spend it. Now, we would love it if they spent on Snap-on trucks.
Yeah,
but that's one opportunity, because that would be good for us. But I think we're going to have to see. I'm not so sure it's going to roll into the economy as quickly as we think, at least with the people who've been working. Of course, the people who haven't been working, it's a big difference.
So Nick, let's unpack that for a second. So the idea is that we're going to get this big demand pull. The supply is not going to be there for the stuff. Therefore, we're going to see higher inflation. Are you expecting a big demand pull? And if you are, can you meet it?
Well, we came out of the year stronger than when we entered, and our fourth quarter was baffled. I mean, the thing is, we were up 12.5.
Someone says I'm losing my mind. I lost my mind a long time ago.
And our capabilities were stronger. So I'm not worried about meeting the demand. I think we have certain individual items that are going to be good for us, like the idea that, we're talking about Snap-on in particular, people are going to drive more. They're leaning away from being in the cities. They're not going to depend on common transportation. They don't want to depend on it. I think the other thing is cars, as you often talk about, electric cars, plug-in hybrids, more hybrids, different autonomous vehicles. These are good things for a company like Snap-on because it creates variation in the garage, more and different tools, which is our lifeblood. So those are great opportunities.
Wait. How does going from a gas car to an electric car create variation in the garage? It seems to me like it would take tools away from the garage. I don't get it.
Vaccine is going to be important in that situation. And I think it's important for people to know. In this plan, I'll go on a plan. We have vaccinated already about a third of our people. They're essential workers. And they're the people who feel most at risk. My point here would be, if you want to get rid of the COVID costs, as we do, and you want to get everybody vaccinated, you're going to have to sell to the middle group that don't feel as much at risk. You're going to have to tell them, if you get vaccinated, what are you going to be able to do? Take off?
All right, let's jump on over here. What's funny is I think we started a trend in the course about having a course member cruise one day.
Capacity.
That would be really cool.
Will be shorter too.
A lot of them have their own islands in the Bahamas, which are essentially a bubble where they can control the vaccinations, they can control the testing, and naturally we're going to need Mexico.
Now, despite what went down a year ago, multiple channel checks and future bookings data from the cruise line suggest that travelers are eager to get back on board. Norwegian disclosing that 80% of its January-February bookings are new cash bookings. But a lot of questions around the vaccine. Norwegian, along with Royal, have made starting announcing vaccination requirements for their crew members. The industry is still deciding whether to require passengers to be vaccinated as well. In the meantime, till we get that restart, it's cruise ports, even like this one here at Pier 88 in New York, guys, that is feeling the effect. Back to you.
I miss going on a cruise. Okay, look at CIIC. All of a sudden, just had a really, really hot spike here. Let's look at this over on the day chart here. So CIIC has gone as high as $36. And it's really trended down since the hype mill. Like, this is peak hype over here, right? And this is very common. And this is a very, very important thing to remember. Remember that peak hype is the balloon going. It's kind of like they put the balloon on like the helium machine at the grocery store when you're a kid. And it just goes from like nothing to, right? And then every day that balloon shrinks a little bit. It's literally called the hype cycle. Oh man, I'm so itchy today. I slept with the window open. Apparently that's a big mistake in spring. Oh man, I'm dying. Anyway, so we could see this sort of deflation happening here of that balloon. And all of a sudden we've just had this spike from really this pit here. We've been up the last 2 days. That makes sense. But all of a sudden right now, we just shot up about 13% out of nowhere here. It looks like we are selling that news a little bit here. So let's find out what happened here. Okay, CIIC. There we go. Okay, CIIC. This is the Arrival, the bus manufacturer. Does Kevin have German roots? 9! Maybe. Okay, so. Oh, no. Implied volatility surges as shares rise, but they didn't say why. Why? Put call ratio? No, I don't know. I do not see company news here. Okay, let's try CIIC. Okay. All right. I don't actually see any news on this. I feel like there would have to be some news. Does anybody know what happened at CIIC? Because that, I mean, maybe it was just a big buy order. Because the volume is crap. That's probably what it was. I mean, a buy order of, say, about 250. Okay, let's just say. So 250 at $26, 6.5 mil. That could have just been some individual investor, honestly. Some individual investor, here you go, 6.5 mil order. Because I don't see any news, which means that's probably going to deflate. I think if Warren Buffett bought CIIC, it would be a lot more than 6.5 million. And that's assuming all of that volatility was all buys, roughly. I did shave a little bit off, which it won't be. Lordstown continues its decline after that hit piece by the Hindenburg. All right. Yeah, so CIIC just really kind of deflating there again. It's some big buy order. That's what did it here. All right, what are they talking about over here?
That has nothing to do with COVID. $86 billion for a union pension bailout. $4 billion for a loan program that says if you are Black, brown, or Asian American and a farmer rancher, you can write off 120% of any loan you have from the U.S. Department of Agriculture without an asset test, without an income test, because of your race. And we got $120 billion for K-1 through 12 education. And the CDC says the cost of COVID to our K-1 to 12 is between $9.2 and $31 billion. And we're going to shower the teacher unions with $100 billion in surplus.
I think this guy really likes the stimulus package. All right.
Now
see what we're talking about here.
Target.
Nothing. Find that. Oh, wait. Here we go. Here we go. Wait, we need some music. What music do we want? Let's see. This is kind of what we're feeling like today. Okay.
It's up more than 20%. It's under pressure right now, down about 2%. President Biden, along with the leaders of the other so-called Quad nations, Japan, India, and Australia, are meeting today to, among other things, reportedly begin to build a rare earth procurement chain, reducing dependence on China-produced metals and elements which dominate the global market. Rare earths are used in everything from smartphones to EV batteries to even military aircraft.
All right. We're going to go to the top news right here. So let's see what the suits are reading. We got bond and stocks face sell everything Friday. We could look at this, guys. I think this is the Markets Live blog. Is it? Or let's go to it. Market Live blog. They have a blog in here. Goldeneye. MP Materials. Yeah, a lot of people really like MP. That this was a rare materials ETF. MP is an individual company, right? All right. SOFR may drop to 0. That's what I used to pay on my the interest on my margin. Well, there's a spread, and that's why I pay like 1.5% or whatever. But anyway, demand for U.S. dollar denominated short-term assets pushed the rate of the overnight general collateral repurchase agreements to negative territory Friday. Oh my gosh, that's a mouthful. Okay, so the interest rate on this fell to negative territory Friday. Got it. Okay, here's the sentiment. That being said, the 75th percentile of inflation expectations remains elevated, the highest since the spring of 2015. Wow, inflation expectations. Actually, not much news here in the live blog. It's kind of boring. All right, let's look at the sticks again here. EXPI, I'm bullish on EXPI. I like EXPI. That's a long hold for me. Express 13%. Nice little bit of volatility over here. Costs, on the other hand, almost straight lining again. Costs is just one of those. Lose a lot or make a lot real fast. Look at these, though. The recoveries here. Macy's, Nordstrom, AMC, Spirit, all up 5 to 6%. And these are the stocks that literally sold off 5 to 6% when tech was going up 5 to 6%. It's so blatant. It's crazy. All right. And then losers, ChargePoint, Blink, Bev, Peloton down to 109 now. Oh, look at that fall on Peloton. Oh my God. Right there. Somebody says the 10-year is soaring. Well, it did soar a little bit. Are you saying it's soaring more? Oh, you are. How dare you point this bad news out to us? This is horrible. We need some bad music here. Let's have the bear and the train wreck. Yeah. Oh no. 1 point. Okay, let's see how this compares over the last month. Is that the highest? That's the highest I've seen it. It is. It is. Okay, we are now at the highest level of the 10-year bond we have seen. Honestly, I think this is like this should go to 2%. But personally, I don't think it needs to crash the stock market. But maybe that's because I don't want it to crash the stock market. But then again, I wouldn't mind going shopping again. I'm too itchy today. Don't sleep with the window open in the spring. It's stupid. Man. So what does it mean when the 10-year spikes? Well, society and the markets believe that as this chart goes up, it means inflation is more likely to come, or people think inflation is more likely to come. And that leads stock prices in things like the tech sector to sell off. So this relation kind of broke apart in the last 3 days. We had some days where it was up and we were still recovering very nicely in tech. But now that relation is back. It's day by day is really what it is. All right. What do we got over here?
Thank you so much. It's great to be here.
Let's hear it.
I've been thinking about the chamber a lot lately because you've been constructive on stimulus, which we obviously have gotten. You've been asking for an easing in trade tensions, which looks like we're starting to get. You were cautious on a minimum wage hike that got excised. I wonder if you could comment on how your priorities have been met lately and what the new priorities are going to be from here on.
Sure, absolutely. I mean, as you well know, this is a pivotal time for our country. We got to get this country back to health and back to economic health. And the chamber has a great team and is ready to do just that. So we have been pleased with some of the developments that you cited, but there is, as you know, a lot more to do. And next up, we've got infrastructure and immigration.
So let's talk about those two. Which is truly on the front burner? Which is more likely? And we're in a period now where, bipartisanship looks like it's going to be a tough hill. There still is this growing sense that infrastructure at least can be put on the table. And I know you guys have been talking about trying to get this done by the middle or early July.
Build by the 4th of July, right? It used to be corn was knee high. Now it's build it by the 4th of July. Look, we have a lot of optimism about getting infrastructure done, right? We think there's a compromise to be had here. It might be bigger than some on the right want. It might be smaller than some on the left want. But we need to be globally competitive. And we've got crumbling roads and ports and bridges, and we need more broadband. And
quick note, looks like GameStop doing a little bit of almost a breakout here.
All right,
Look at this, up 13%. Oh, I saw 1337 for a second there. That was cool. Brief moment. Oh, I saw it again. I need a screenshot of that.
Be any bipartisanship when it comes to infrastructure as well, that there's always going to be something that divides the two parties. So what gives you that confidence that this thing can get passed if it's got to get past the filibuster?
Because I believe that there are governing adults who know that they have to tackle complex problems and meet the opportunities ahead for Americans. And I just believe—
really good insight here on the Tesla fire. It's the hydraulic fluid press. And that could stop Model Y line if it damages the press. I bet it damaged the press. that building was on fire in a bad way.
By state-sponsored entities in recent months. And certainly there were headlines again just this morning about possible ransomware situations as well. How big is the risk around cybersecurity for American business? Is there any way for us to quickly get our arms around it? How many conversations are you having about this and how big the threat is?
Yeah, important point, right? And I think all Americans are paying attention right now to the size of this threat. And yes, there are.
All right, we're going to jump on over for a sec. Let's see what else is being covered. What do we got? Oh my gosh, they're talking about the border again on Fox Business. Stop. Okay. Migrants testing positive. Why is this on Fox Business? I don't know. Let's talk about Huawei then.
Happening with Ant as well as Tencent. The latest is that the Ant CEO unexpectedly resigned today. The Chinese company had already been demanding that Ant overhaul its business. Joining us now is Shelley Banjo, Bloomberg New York bureau chief. She covered tech in China for several years. Hey, Shelley, it was for personal reasons that the CEO left. What's the real story?
Yeah, so he did say that it was personal reasons, which is, often something that people say when they step down. But this does come on the heels of a bigger push in China to really regulate some of these tech companies. And this idea that for a long time, a lot of the Chinese tech companies were allowed to kind of keep growing bigger and bigger and bigger, and that they've kind of reached a point where they are starting to almost provide a threat to the government itself because of the amount of data that they have, because of the amount of power that they have.
Which leads us to then Tencent and sort of more regulations on the likes of Tencent. What's the damage that could do for tech investors in China?
Tencent has been this just runaway growth stock for companies, for investors. And so this could be a really big deal for a lot of investors who have, wanted to kind of cash in on the growth of China's tech. A few months ago, when the government went after Alibaba and Jack Ma's Ant Group, people were wondering, is this something Jack Ma did? Is this some sort of message that's just because Jack Ma reached too high? And the Tencent move kind of shows you that no, it's not. It's actually an entire industry issue that, Pony Ma, who's the richest person in China, is also being snapped up in all of this.
Yeah, I'll have to watch that too. All right, Shelley, thanks a lot. Bloomberg's Shelley Banjo. All right, well,
Tony Ma, I know about Jack Ma. Tony Mo.
Approved the next 5-year plan, setting modest GDP growth target. And a press conference, Chinese Premier Li Keqiang cited uncertainty around the economic recovery.
We would undoubtedly look favorably on robust growth, but we are also keenly aware of the large uncertainty around the economic rebound in China, as well as global economic growth and development. We're saying 6% growth. 6%.
All right, let's go ahead and look at the sticks again here. Let's see if GameStop ended up continuing its run here. Not quite. So GameStop up about 12%. We got Express up about 18%. Macy's, Nordstrom. These guys are running today. I mean, these are like straight up today. Straight up and to the right. Macy's, Nordstrom, they're killing it today. Spirit Airlines. But again, this is what the suits do. They get impatient. They move over to this stuff. And they continue to push things up, and tech down. That creates very nice buying opportunities, like being down -666 on Peloton. Peloton hitting a low there of 109.26, almost at those days' lows presently. ChargePoint down 10.7%. Not as bad as it was at the open. It was worse at the open. Had recovered substantially more. Did sell off again. So we are at relative-ish lows. 44 on Neo, freaking bargain. Lemonade almost under 100 again. Kind of giving up not all of the gains we saw yesterday, but certainly a chunk of the gains that we had yesterday have been given up. Tesla not at the day's lows at about 674. Vacillating a little bit here. Palantir down a bit. We've got Express, GameStop, Macy's, Nordstrom. Yeah, no, these guys just still kill. It's surprising, too, seeing Microvision kill it the way it is. Ubiquity over here trading up about 0.5%. Sort of the middle here, the Target, the Domino's, Costco. These guys usually don't move more than like 1 to 2% in a day anyway. Twitter sitting at 67. We got to get GameStop to 420.69 again. We were briefly there. GameStop's selling off a little bit, unfortunately, but it has been on an upward trend just throughout the day today. The 20-day moving average, nice sort of uptrend here. All of the moving averages here, nice uptrend. So let's see. Let's see if we get any interesting interviews. Are there any interesting ones? What do we got here? No. Okay, they're talking about what's coming up. Fine. Let's see for a sec.
Artist people.
Whoa.
Now among the top 3 most valuable living artists, selling his NFT work for $69 million at Christie's yesterday. Yes, he's a valuable fellow. Can you put a value on a person? Anyway, we'll ask him that.
That's
a lot of
freaking nuts. Enjoy the digital art.
Pick up in the economy as everybody expects, particularly aided and abetted by the continued rollout of vaccines. Then American imports will go up, which is clearly something that will benefit people that, countries that export a lot to the United States. So there's no question that, if America's growth picks up and the balance of payments deteriorates as a result of imports going up, then the rest of the world benefits in ways which does not happen in the same way with China, by the way, because China runs surpluses rather than deficits.
So tie that in then to the meeting with the Biden administration officials and Chinese officials in Alaska. I mean, does that make the conversation a bit more challenging, particularly on this Huawei news?
Well, I think, I'm not sure whether the Huawei news is basically a bit of a rounding error in all of this. I mean, the Chinese view seems to be, at least the kind of the rhetoric is, this is a strategic opportunity to make progress with, the United States. I think the United States view has been a little bit more of a cold shower, and it's more sort of exploratory. And, we're going to talk about things that we agree with and talk about things that we don't agree. And I think, the relationship between the two countries, obviously, as everybody knows, is pretty feisty. And there are a lot of things.
Feisty. That's how Oxford University is describing this relationship, or at least a researcher there. feisty.
China does not appreciate, and certainly is, I would say, suffering may be a bad word, but certainly is on the wrong side of the bargain of this kind of restraint infrastructure which the United States has set up in the Commerce Department, Treasury, Department of Justice.
Be interesting. The China-U.S. relationship will be interesting to see. I think we'll see a lot more of that during the infrastructure package debate. So 10-year, obviously still substantially higher today, but trying to trend down a little bit here. But I mean, this is a joke of a trend down relative to even some of the other ones that we've had. Even just looking back over the last 3 days here, we went down to 1.47. I personally always thought, and we mentioned this at the beginning of the stream too, that 1.5 was the threshold level people cared about. Apparently now people care about 1.6 too. All right, let's go to the top news. Let's just see what the suits are reading. Always good to know what the suits are reading. All right. Oh, AOC now calls on Cuomo to resign. U.S. sentiment advances to one-year high on Outlook. Lordstown Motors plummets. We saw that. Okay. Trump holds court in Mar-a-Lago, demanding GOP bows to his will. Okay. Swiss police raid apartment of a hacker. Bezos invited by Sanders to hearing on income and wealth inequality. I feel like that's Bernie's way of getting, like, that's the clickbait. Like, confronting Bezos and then to talk about wealth inequality. Why don't you pay your workers more money? All right. What's going on over here? Costs selling off a little bit. I am still shocked that Canoe was up 7.8% on a day when all the other EVs are down. It can't be that pickup news. The pickup news was nothing new. They talked about that. I think the only thing that was different was they had either pictures or graphics. We don't really know. Oh, yeah. All right. Let's see. What else we got? I need another cup of coffee. Or this one hasn't hit me yet. Who knows? I only had half of it. Yeah, Pinterest, Tesla. Geez, Tesla 675. So we're not at the day's lows. The market opened up a little low on the yields jumping. This is really what we talked about yesterday. Made a video on this yesterday, that at some point, inflation concerns are going to come back and we're going to see red again. No idea it was going to come back the next day, but it did. Churchill at 20. Churchill is actually up from, even though it's red, it's at 26.16 because we saw this earlier in the 25s. So it's recovered nicely here. Xpeng also recovered, to 34 from 32 where it was this morning. So kind of an intraday recovery here. I don't know that I would be shopping big on a day like today. It's not painful enough. This is still for me an opportunity to just look at margin and go, let's reduce. And what else do we have here? Yeah, GameStop at about 11%. Also selling down a little bit here. Sort of a tentative market here. With the exception of EBIX. EBIX, that's the one that's running right here. Yeah, I don't even know what Rally is. I see the comments, but I have no idea what that is. And if it's a read, I don't like it. Okay, EXPI. The only read I liked briefly was Simon Property Group, solely as a swing trade, recovery trade. All right, talking about deep fakes on CNBC now. Okay, Varney's talking about riots and protests in Portland, Oregon. And what do we got on Bloomberg? They're talking about, it's still the Oxford guy.
Not huge by our standards, but it's huge for them stimulus that they injected into the economy during the pandemic last year. So this is comes at a bad time, So if you've got domestic monetary conditions which are starting to tighten in China later this year, and external monetary conditions are tightening because of higher U.S. Treasury yields, maybe a stronger dollar by that time as well, then this is not going to be very helpful for the Chinese.
George, always love catching up with you. Such great insight. George Magnus of Oxford University. Thank you very much. And here we have some local politics breaking news for you. Democratic Congressman Jamal Bowman and Alexandria Ocasio-Cortez.
We already read this.
Are urging New York Governor Andrew Cuomo to resign. They both said in a statement that allegations against him have all been consistent and highly detailed, and there are also credible media reports substantiating.
Yeah, I mean, give me your thesis on Relly. Like, I have no, I don't. The problem is when I look at these stocks I know nothing about, like literally, and I don't even know what it does, I feel clueless. So like, give me a thesis. Like, I like Relly because I think this. And do that for any stock. Like, if you give me a thesis, it's a lot easier for me to have something to base off. But let's go see here. They're talking about politics. Fox is talking about politics. And, we got the AT&T, bro.
Slightly higher level of investment in C-band than what we expected. The reality is that's about a year's worth, a little bit longer, but about a year's worth of deferral on getting us down to our ultimate ratios that we want to get to on the balance sheet.
Speaking of that, C-band.
Ted's got a slam on no wonder Americans are broke, he says. The finance channels like Fox and these are talking about politics more than finance. Oh, my God. Owns 6 insurance companies. Okay. Yeah, I mean, insurance is a funny biz. Very, very low margin. And, Lemonade's trying to fix that. But I feel like even they... we might be talking to Lemonade here soon. We'll see. But I'll just type it in for a sec. So it's a Reliance Global Group. So what do they do? Like reinsurance, or what are they? So let's see. New sales initiative. What's their new sales initiative? Let's jump here. Direct-to-consumer offering. Yeah, I don't know. It would take a little bit more work to just research these things. Underpriced insurance tech gem. Reliance Global Group. Let's look at the security description. Let's see. Operates a holding company. The company, through its subsidiaries, invests in real estate, insurance, and other fund. So it's like a bunch of crap that it does. And look at its price chart here. Since the pandemic, it's literally just gone straight down. I don't know why. It looks like it does a whole lot of stuff. It'd take a while to really look into this. It's not something we really have. It's an investment company is what it's listed as. I mean, I invest in companies myself, but I don't know about investing in an investment company. I mean, I know individual companies make investments, like Apple certainly makes investments in that, and Tesla, but this really touches everything. I don't know. Not exciting. What is this? NNOx uses nanotechnology, like nanobots, to replace x-ray machines that usually cost millions of dollars. Their cost is $10,000 plus they get paid for every x-ray. Oh, so a cheaper way of doing x-rays, huh? So what you have to do to really evaluate something like that, in my opinion, is you really have to talk to doctors and see, would they actually use this nano imaging? And oftentimes, if you can get to the industry opinion on this company, like, will they actually buy these machines? Like, doctors might tell you, like, yeah, we don't really like it because of this, or we like it because of that. It's good for you to know. Kind of like the butterfly ultrasound. You do the same thing there. Like, okay, are you guys actually going to keep it or use this in your office? And so another reason, buyer can be a little bit more difficult. But that's the way I would start by investigating that. Is, next time you're at the doctor, talk to your doctor. Or find some doctors on some online forums. DocuSign 209. Continued sell-off here throughout the day. Zillow down about 6% here. Fuel Cell, Redfin down 4%. Neo down about 4%. Matterport 3%. Not lows of the day, though. We're not at lows of the day. We really opened at lows. And, yeah. All right. So I will be live in the course member live stream in 1 hour and 11 minutes. I hope to see you there. The coupon code does expire in 3 days. So if you have not yet, check out that coupon code link down below. Gets you 38% off on any of the programs. You can also bundle up. And folks, we will see you later. I'm going to go make more coffee and go